following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking tune means it is time once again for the Option Block, everyone's favorite source for a wee bit of options info, a little bit of education, a little bit of analysis, a little bit of what's trading, break it all down, throw in some OX stuff into the cauldron, throw in a little bit of unusual activity, sprinkle on a dose of complete insanity, and you have the Option Block. My name is Mark Longo from theoptionsinsider.com as well as from the Options Insider Radio Network, the ever-expanding Options Insider Radio Network. If you haven't had a chance to tune into our latest shows, of course, we have the Futures Options Roundtable, and coming soon to a podcast provider near you, we, of course, have our new show, Trading Tech Talk, where we dive into all the cool tech that makes your trade go from when you click the mouse to the clearinghouse and back again. So stay tuned for that one. It should be launching, hopefully, if we can get all of our ducks in a row. First episode should be coming to you this week, so stay tuned for that. But we're on the Option Block, so it's time to talk about options with my fellow all-star panelists, starting off with the man beaming in from the great state/principality/kingdom known as Maine, none other than the Rock Lobster himself, good old Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, and how was your weekend with the hot skates?
The weekend with the hot skates was pretty fantastic. Friday, almost epic, perfect conditions to skate. Gorgeous.
Is that like a perfect weekend in Maine then, when you have the hot skates and good weather?
Kind of. And my kid got his first hat trick on his hockey team, so he was pretty jazzed. I think I was more jazzed, though, but he was pretty jazzed.
Wow, so you had the hot skates. Your son's doing hat tricks in hockey. That's a pure hardcore Maine weekend right there.
It's a lot of ice. Let's just put it that way.
That's why you moved to Maine, for weekends like that.
I know, and I never even knew what even hockey was before I got here. It's very strange how life works. But the Viceroy could attest to that, I bet, after having all these many children that he's had.
The Viceroy can certainly attest to that. That is, of course, none other than Mr. Alex Jacobson, beaming in from Casa Jacobson, where the Skype gods favor him ever so nicely. Mr. Jacobson, welcome back to the program, sir.
Hey, Mark. Good to be here. Glad to be back. A rotten day in the market today, but other than that, I'm glad to be here.
Yeah, we always have that perverse interest here on this show, that days like this at least give us a lot of fodder, a lot of grist for the mill to talk about. So we kind of almost are contrarians on this program. Quiet days, strong up days, they don't really give us as much to talk about as days like today. And speaking of days like today, let's get right to it and dive right into the Trading Block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the program where we break down the day's action, the day's activity. We are recording today, January 13th, so keep that in mind when you're listening to our rundown here. It was indeed an interesting day. A lot of red on the screens today. Another day, Alex likes to joke, these are the days when you get to tear up your notes from about halfway through the day and start over towards the end of the day. And that kind of is what happened today. I actually wrote up our notes. I had a little bit of time earlier in the day than usual today, so I wrote up our notes for the show mid-session. And, of course, that narrative has shifted since then. At the time, it seemed to be a decent sell-off, but kind of still relatively mild. That certainly seemed to strengthen towards the end of the session with the losses expanding and the S&P down from about half a percentage point all the way down to nearly 1.5 percentage points on the day, about 1.3 percentage points or 23 handles on the day to 1819. The Dow, a bit of a laggard actually to the downside, only down 1.1% to 16,257. And the NASDAQ actually leading the charge, down a full 1.5 percentage points or 61 handles to 4113. So a lot of blood in the sea there, of course. Given the pronounced sell-off, we actually, we talked before about tax-motivated sell-offs and vol not really being able to catch a bid. It seemed like it was unfolding that way a little bit for a while early in the session today. We didn't see vol really catching a bit of a bid, and then towards the end of the session we did. People actually starting to realize, hey, there's actually some blood on the street here. We actually may want to pocket a little bit of vol for a rainy day, and we started seeing people actually buying some vol. Of course, the VIX ticking up, closing today 13.40, up about 1.25 points on the day. So actually some vol buyers today. Andrew, did that surprise you? Finally saw people actually coming in and lifting some offers on some vol?
No, I mean, they didn't really start buying it until the end of the day, to be honest. Actually, VIX traded like 11 and change today, 11. Not quite the low tick of the year, but man, it was pretty low. So no, it doesn't surprise me that once the market started to, crap out, they jumped in. But the move was underwhelming the whole day. I mean, the VIX is up. We had a 10% move, but with the mark, we would expect it's actually the move is probably a little shy from historical norms, like if you did a historical average. So, I mean, volatility is definitely up. It bounced hard off the around 1180 or something. And it slowly kind of wound its way up the whole day. So, was it the market down? I just didn't feel like there was a lot of verve in this sell-off. Now, that could change tomorrow and people could pile in and say, oh, this is the end. Stocks are never going up again. But, I mean, at least the volatility had a little bounce today. And it looks like it's actually the vol futures are trading lower after hours, if you can believe that. So just not a huge amount of bid. The vol is up, but there's just not a lot of gusto in the buying for it.
Yeah, people really seem to need convincing today. Like you're right. It didn't happen earlier in the day when the market with the sell-off was still mild. People weren't running for the exits. People weren't looking to put on some hedges or put some vol in their back pockets. It wasn't until the end of the day when it was clear the writing was on the wall, the market was selling off, and people realized this wasn't just a little bit of a course correction that they decided, okay, I guess I'll pick up a little bit of juice. And you're right. I mean, the vol VIX didn't really perform as you might expect on a day like today. Vol's already coming off here in the after hours, so a little bit of near-term hedging towards the end of the day, but not the perhaps stampede to the exits you might have expected given the movement we saw today.
No, not at all. I mean, I didn't do – we have a little game on our strategy letter, and I could barely even adjust it. I mean, I had the individual names move, but just a little bit. Volatility, like, barely budged. So, I mean, this is a first sell-off. Usually I don't short volatility into a first sell-off, but it sure hasn't really moved much. That's all. It's like, oh, okay, well, we'll wait.
Yeah, I was looking through my slew of different outlets as I am wont to do in preparing for this show, and I saw interesting little write-up in the journal this morning. They're talking about the put-call ratio out there in VIX. People listen to this show for a while know kind of what I think about put-call in general. And, of course, people can look at any ratio they want and find someone to say any sort of time frames, any sort of analysis they want to make anything kind of fit within their ratio. But they found some expert, I forgot who it was, quote unquote expert here in this article, and he was talking about the put call ratio in VIX and talking about how it has slumped to about 0.33 now. And according to his analysis, since 2008, each time the ratio has fallen to 0.33 around these levels, the VIX has spiked about 70% at some point over the 3 to 6 month subsequent time horizon. So again, that's a lot of ifs and thens in there. Of course, you can make any time frame kind of fit whatever analysis you want to do, but still interesting in and of itself. To show that given what we've been seeing and everything we've been talking about with not too many prospective sources of vol on the near-term time horizon, people still loading up on upside here in VIX and expecting a decent pop in the near term. Does that surprise you at all, Senior Andrew?
No. Nope. VIX, the thing is VIX cannot go, it's very hard for it to go lower. I mean, Alex and I thought we'd see a lower number this year. I haven't changed that just because we have a sell-off today, but usually what happens once we get around the 12 handle, people start buying calls, and that's when the VIX skew gets totally outrageous. And, those calls, people start paying a lot of money for them. So, I mean, on a day like today, those upside calls might have moved a little bit. But, not a huge amount. I was looking at the Jan 14 calls, looking at the price last week. They're the same price this week. So, if you were buying even those 14 level calls, you just had a 1 point move in VIX cash. Those calls didn't move. It's not like they went jumping here. So VIX was up, but at least this sell-off did not produce, I would say, a money-winning move for any call buyers in VIX.
No, certainly not yet. They've still got a little bit of ways to go before that 70% pop that this guy's talking about materializes. Mr. Alex, Mr. Viceroy, what was your take over there from Casa Jacobson today, particularly as the sell-off intensified towards the late day? What was the feedback coming from the desk today over there at OX?
A lot of single-name trading today. Obviously, perennial favorite at OX, LULU, got just beaten today, down almost 10 handles. F5, which is also a perennial favorite, actually had a good day. But today it seemed a lot more single-leg trading, single-name trading. SodaStream, the stock, not a lot of option open interest there, but that's a name that was active on the desk. And, when I queried Grigas this afternoon, he just said it was a little bit of everything today. But, the tone throughout the day was kind of uninteresting and lackluster. And then, ironically, the Washington released the December balance surplus, and they had a record surplus in December, which every time you look at that, you go, what? They've never had a surplus? And I thought the market would have maybe gotten some strength on that, and it immediately sold down from that. So I couldn't have been more wrong. What's going to happen this week? I mean, this week is earnings from the banks and brokerage houses, and I think nobody expects any disappointment there, especially with the pop in the long rate that we saw in the last year. So I give you a lot of reasons why the market goes, maybe sideways for a little bit, but not really sure why it went down as hard as it went down today.
SodaStream, that's just a fantastic one. I'm looking at it now while we're talking. These are, of course, the guys who make those home carbonation systems you may have seen on late night infomercials. Make your own soda, save pennies on the dollar by, I guess, bottling your own soda. This one, lighting up the tape today, doing this. They do about nearly 8,000 contracts a day, which is a ton for a home carbonation manufacturer, doing about 44,000 contracts. Of course, they were selling off pretty aggressively today, down about 26% or 13 handles to about $37. So not exactly good news in the offing here for SodaStream, but a lot of option vol for essentially an as seen on TV type brand. Kind of interesting there. And of course, we are joined better late than never by good old Uncle Mike Tosaw, beaming in from scenic and lovely St. Charles, Illinois. Uncle Mike, welcome to the show, sir.
Good to be here.
Now, Uncle Mike, what caught your eye in today's frenzied sell-off, particularly toward the end of the session here?
Well, we have a some diagonal put spreads with which I had to roll down some short puts today, and they were acting as kind of a smaller hedge to combine and buy and finance premium for the larger hedge on some overall market positions with which we had. So did that today, and I'm going to talk a little bit about that in the strategy block, but nonetheless, it really wasn't – it's a sell-off, and you have them from time to time. So is this one where I think we need to be run for the hills? No, but a wise man once told me that there's never been a better time to sell your shares in the history of the stock market than recently. And if you've taken advantage of some of the lower volatility and bought some protective puts or perhaps replaced stock with calls, days like today really don't scare you too much.
Of course, a lot of other stuff cooking here in the markets today. For some of the more sizable traders out there, we're seeing some interesting dalliances, getting rid of the position limits out there in SPY. Something people have been talking about for a while is a bit of a pilot going on. I think until December of next year, where they're actually going to start getting rid of some of those position limits to actually start trading a little bit more aggressive, a little bit more size out in SPY. This will be welcome news to a lot of the size institutional guys who, for whatever reason, have seen SPY as perhaps a lesser alternative, something like SPX, for getting their institutional size off. SPY may now become more of a relevant player in that conversation. I know, Andrew, this makes SPY now much more relevant for your size needs, right?
Of course. I need to trade like 50,000 or what is it, 200,000 lot contract size for SPY.
Something like that, yeah.
Well, every once in a while. I think that, who probably asked for that was the guy from SAC, because he used to wing around SPY and E-minis pretty fast. I guess he won't be doing it as much anymore. He requested this 2 years ago, and it's finally coming through now.
Yeah, one of those things probably not going to be relevant to the vast majority of our listeners, but still interesting. Maybe we'll see some interesting flow going up in SPY now as a result, particularly in the options. A couple other things that caught my eye, scanning our news ticker over there at the optionsinsider.com. You can check out all this stuff and more, surfing on over to the mothership there. Some interesting stuff coming out of our friend Nikolai over there at Bloomberg, doing some analysis on Twitter, looking at the implied vol of, I believe it must be Feb, because he's talking about earnings. And that's when Twitter earnings are. But according to his analysis there of the implied levels out there in Twitter, near-term downside puts, looking at the highest implied level in all of the Russell 1000. So the cost to actually come in if you want to actually lock in your gains or hedge yourself ahead of Twitter earnings coming up in a couple of weeks here. You're paying literally through the nose in this case. Pretty juicy stuff out there in Twitter. Let me see if I can just pull it up right now as we're talking. Roll on out to the expected date, I believe, yes, is the 5th. Of course, we all know what that means for expectations when we're talking about expected earnings dates. Twitter closing today about 57 3/4 or so. So looking at some near-term downside puts here in Feb, we're talking about a 97 implied level here. So this is pretty juicy stuff. Not exactly unexpected, given what we've seen going on in Twitter of late, but still interesting stuff here going on in Twitter.
The vol curve now, the vol is so high it's almost flat on the downside from a skew point of view. Looking at the Feb 7 cycle, there's actually more curve in the upside calls than there is in the downside puts, if you can believe that, in Twitter.
Always a strong bullish indicator.
People are buying calls, they ain't buying puts. I mean, relatively speaking, they're kind of buying everything, but it looks like, liquidity providers do not have, there's no need to skew the downside puts up yet. So I find that very interesting. Could be for some interesting trade in there as we get closer.
That's really surprising because I still think it's probably got to be tough to short. So
I know, but now the vol's like 100, or 97%. So yes, I think it is still tough to short. But the squeeze is not as bad as it was in there, at least from the reversal conversion pricing. So the paper is just definitely buying out of the money calls. I mean, the volatility on the 80 call is 99.96. And that is that call is 80-cent bid in Twitter for the 80 call. Wow. So that's some real vol.
Yeah, you're right. I'm looking here. Yeah. This is just the of course the cycle being the first Feb weekly because your earnings are looking on the 5th. That's 80 cents. Wow. That's some love. Yeah, surprising looking at the numbers here. The open interest actually it's about 1.2 to 1 puts over calls here in Twitter land. That kind of I would think it would be heavier, actually. Of course, given what you just said with the skew, maybe it doesn't come as that much of a surprise. But you think it would be heavier, given what Alex just said about how it has been so hard to borrow of late, and people have been chasing puts for that precise reason and bidding this stuff up to ever more astronomical levels. Of course, those 80 calls are pretty astronomical as well. Maybe, who knows? Maybe these levels are the reason why NPR called options the riskiest place to invest outside of penny stocks last week. I have to just give a tip of a hat to our audience. I love our listeners out there. You guys monitor all the different airwaves for all the different outlets talking about how they analyze and talk about options. Whenever something comes across your radar that you don't like or think is kind of weird, you always let us know about it. I think this was, I should probably credit the listener who gave us this. This was, I believe, John King over there on Twitter sent us this link. This was an NPR Marketplace show they did last Friday. You should go check it out, listeners, if you haven't. About 15 minutes in, they get someone calls in who writes about how a young guy who I guess he had some losses in the market because he got into quote unquote risky things like biotechs and options. And then the host, and I think they had a guest who was some sort of financial planner, kind of proceed to go on this kind of quasi-tirade about options and how they said stuff like, the riskiest in place to invest out of penny stocks. The financial advisor said he shouldn't be putting his money in insurance vehicles that have a negative expected return, getting away from the fact they didn't even talk about what this guy was doing. I'm assuming he was loading up on upside calls, if anything. And then they kept going on about telling him to sit on his hands with his retirement money and do a set-it-and-forget-it approach to retirement planning, so no hedging, no things like that. This is kind of the mind-boggling kind of stuff we kind of expect out of quote-unquote mainstream financial media now, particularly when we're talking about asset managers, these guys who are just long-only equities. I would love, if I'd heard the show live, I would love to have called in and asked this guy what his plan was if the market corrects 5 or 10% in the next couple of weeks or next month or so, what his plan is aside from going to cash. I'm guessing that's probably what his plan would be. But nonetheless, interesting stuff. This really probably shouldn't come as a surprise to any of you guys, nor to any of our listeners, that people don't really have a good grasp of options. I'm tempted to go on this show and try to set them straight. We'll see. I'm not sure if they'll be welcome or open to a nuanced discussion of the proper use case of options and how it could mitigate risk. But still, nonetheless, I love it when you guys annuities. Yes, exactly, annuities. But then, nonetheless, I love it when you guys let us know about this stuff, because even with all the different outlets we monitor and our team monitors here at Insider, we miss ones every now and then, and that's kind of something that doesn't really surprise me. Tosaw, you should go on there as a financial advisor and tell them how you actually use options and that it isn't so scary and that all the grandmas and retirees in your accounts really are doing all right.
Yeah, I'd like to, but, well, I think options are too risky to discuss, right?
Yes, that is true. Speaking of risky business, it is time, of course, for that most risky portion of the show. I'm talking, of course, about the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block. This is, of course, the portion of the program where we break down the interesting and or the intriguing options activity that we're seeing lighting up the tape today. And as you might imagine, there was a lot of activity going on in the day when the broad indices are selling off over 1%. So a lot of stuff to parse. And I'm going to go crazy this time, listeners, because he did such a good job last time. I'm going to wing it and turn the reins over to one rock lobster to see where he wants to take the Odd Block today. Mr. Andrew, where would you like to start in today's review of dubious options activity?
With the dubious options activity, I'd like to look at Clovis Oncology Inc. CLVS. That's a name that just rolls right off everybody's tongue. I'm sure they're all long-term investors in Clovis Oncology.
Any biotech named after an ancient and hardcore Frankish king, I'm kind of interested in. He was a badass, Clovis.
You know, it's funny because Alex talked last week about biotechs. I think there was some stock that was up, size Ola last week on a potential liver cure or liver fixer. Anyway,
$400 in 2 days.
Yes, that was it. I forget
it's Sept Pharma, but 400. Thank God there weren't options on it. There'd be one less or two less market makers today.
Yes, there would be some blood in the streets after that.
It's down 81 handles today.
Do the same thing with these other stocks, right? So this is just. I mean, you could have picked any paper in this stock today. The stock was up $1.85. Clovis to 76.26, and a paper sold this Clovis Jan 65 puts at 30 cents. Okay, so all right, maybe the stock can't go down $10, whatever. The volatility was 130%. Volatility in Jan today up 56 points, and about 700. And the ADV is 700 contracts. This strike traded 713 contracts alone. So paper just was basically trading on every strike. It was, I think it was kind of a retail-orama on this one. And one of the bigger trades of the day was selling the Jan 65 puts at 30 cents. They'll probably go out worthless. They were trading 55 or 60 cents too at some point during the day. But, I mean, if you're a long holder of those puts, you didn't make a whole lot of money on them, because if you're selling them for 30 cents, where did you buy them? That's kind of what was coming to mind with me. So I think this is just more opening paper selling these things. But, I mean, volatility up all over the place. Volatility in April is 78%. So, my guess for a $76 stock, they must have something really hot on coming, and obviously, just as Alex discussed, the stock that was up $400 over a couple days. I think people are trying to cash in on that. I mean, there was volume pretty much everywhere up and down the line in this thing.
Yeah, there's paper on every strike. Some savvy fellow sold nearly 200 of the Jan 95s today. Bear in mind, listeners, these are weeklies. These have 5 days to go. These are 20 handles out of the money, and someone was selling them for all sorts of scattered prices, including over $1 at one point today. And he sold 70 of them for 60 cents. Amazing.
The stock really had a move today. I mean, it traded up in the mid-80s early this morning, and I think just everything sort of backed off. But we'll see where the volatility goes on this. And the thing is I love when I was looking at Clovis is a development stage company. It's a biopharmaceutical company, which means they have something possibly in the pipeline, but nothing really generating dollars yet. So it's just, it's a biotech that raised a bunch of cash and, is burning through it like crazy right now.
Definitely falls in the unusual category.
It does. And now on the heels of that, I want to do Alnylam. I couldn't even pronounce this. The ticker symbol's ALNY. It sounded, for a second there, I thought it sounded kind of like Alnylam Mortgage Company. I'm a little more familiar with that. It's Alnylam. Alnylam. I can't pronounce the word.
Easy for you to say, sir.
I mean, it's brutal. It's a classic company. Book value is $4. Doesn't make any more money. Trading for 92. Volatility in here. This stock was only up $27 today. To 92.39 again on what I could only guess would be high hopes that whatever they're doing is going to make some money. I saw the Feb 80 puts trade for $1. So to me, this was kind of a savvy guy. The stock was trading about 108, and he came in there and he bought the Feb 80 puts for $1.10. And now they're trading for around 220. When I wrote this, they were 175. So basically, there's an insane bid up in the stock, and the guy went in and bought some cheapy puts. The open interest was almost zero because they just listed them today. And, he already has basically a double on his hands on that.
A name's been moving when Jan is no longer even in the equation. The last strike in Jan is the 75 strike. This thing traded $93 today. Jan is not even in the conversation anymore. That's how fast this thing is moving. It's crazy.
And what's funny is it actually opened up around $40 today. So I'm assuming they must have gotten some approval on something, but the vol's still very high in here. So I'm not quite sure what is up with it. Again, another interesting name. My guess is not every one of these biotechs is going to perform like the stock that was up $400 in 2 days. But this is generating a lot of interesting paper nonetheless.
Man, this is biotech palooza out here these days.
Exactly. Alex, as usual, the Viceroy, calling it. Now, this one's for Alex, even though it's not the 5 he's talking about. It's another 5. I think it's called 5 Below. They must make clothes for tweens, the tweeners. What do you call those kids that are like 12? Aren't they a tween or something?
Yeah, tweens.
Yeah, I don't have any of those, so I don't know yet. So anyway, shares of FIVE are down 243 to 3802. Stocks trading in the bottom of the range. And it just looks like a crazy or a fund, somebody, but it was very scattered volume, sold the Feb 35 puts for anywhere between 35 and 60 cents today. And this to me looks like the classic I'm going to do wheel trade where, somebody's trying to pick the bottom pretty much in here. The thing is that 35-cent sale early in the day did not go so well, and they closed at around 60 cents.
Yeah, it's always fun to see your trade double in your face by the end of the session.
Yes, it's not very good. To me, it looks like it's obvious, the open interest was 2,300, so it's opening paper. And aggressively selling puts. I mean, there's no I don't see how you do anything against this trade. I mean, it's the whole, that strike traded pretty much more than the volume everywhere else. So I think just people climbing in, selling it. And I think by the end of the day, some people are like, well, you know what? Because there's like a lot of 1 and 2 lot paper. Maybe we'll buy them back. This didn't work so good. Because the stock basically opened 40 and spent the whole day selling off. So what might have been okay turned ugly, relatively quickly. The funny thing, though, volatility in February down at less than a point. So, there was an early seller kind of pounded these puts, and whoever bought them, that's a market maker that had a very nice day.
Yeah, that's a pretty big winner. 30 cents on 7,000 contracts. Not a bad day.
Right. It looked like about 6,000 traded at the lower price and about 1,000 traded at a higher price. Maybe somebody just deciding, to close. And they make a retailer offering a range of merchandise for teen and preteen customers. So, one more of those. Okay, your stuff is not cool anymore, so we're gonna tank your stock.
Yeah. What is the half-life of these companies? Because talk about the most fickle audience on the planet.
Well, after the last earnings, it hasn't looked so good. It's down from about $50 to here at 38. So 5 Below is going below. It's diving. And the last, I would be bereft if we didn't at least mention some Chinese online company, but actually found something better. It's a China finance online company. Stock is down $0.50 today to $5.91. It's not really doing much. It's in the middle of the range. But it looks like paper sold 1,000 Feb 5 calls, which are, in the money calls for between $1.20 and $1.50. ADV is only 155 contracts, and the open interest on these calls are nothing. It looked like they're trying to sell them at $1.50. Couldn't quite get filled, and they filled the balance at $1.20 to make 1,000 total. I just think this is like an overwrite. Somebody owns some stock and wants to, create the synthetic put and make whatever that juice is short term. It's not a bad return. It's like a 10% return if this stock does nothing between now and February. So, there's some juice in there.
I like the $1.50 kind, the $1.20.
Not so good.
Less attractive, shall we say.
Yeah, it looks like the bid for all of it just went right out the window. They're like, okay, we're going to make the volatility much, much, much lower.
Yeah, it's funny how they just crushed it because he got a fair amount off at $1.50. Then all of a sudden 50 at $1.40 and then nothing till $1.20.
Gone.
They said, okay, wait a minute, we got a bid sitting out here. Let's get rid of this thing. Crazy.
And so actually the last buyer traded it for like 20 cents over, which I think is probably not too bad of a purchase. There's another stock though that's kind of had, a little bit of a run here in the second half of the year. It was about $2 and it was trading $2 in August. So an interesting, it's all of the movement has been recently, basically. It was doing nothing, and then a couple of good earnings prints, and the stock's actually starting to move around a little bit. So it looks like somebody could be locking in some nice gains with this, just having a hard time getting anything done.
It's like a bunch of April 5s and July 5s went up too. About 500 of the April 5s, and all of them pretty much buys on the April strike, and then 700 on the Julys. Of course, Julys have 1,000 open already, so it could be this same guy maybe adjusting or legging into some times, or it could be some market makers looking to unroll some of this all these calls they're taking down.
It very well could be. But yeah, because that's kind of a tough strike to trade, the 5 strike. They've got I don't see earnings out on the calendar here, but doesn't mean there aren't any. So, but it looks like just I think a buy right and somebody's trying to lock in some money. Might have paid $1 for the stock, so they'll sell the 5 call for $1.50. That works okay.
All right, thank you for that, Mr. Lobster. I like when you take the reins on the odd block. I get to relax a little bit. Always nice here on the old network. But now it's time to keep on rolling right on into our next segment, the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, here we go. Time for the Express Block, of course, the portion of the show where Mr. Jacobson, a.k.a. the Viceroy, takes us deep behind the scenes of the land known as OX from his perch in Casa Jacobson. Mr. Alex, what caught your eye today in between sipping some nice Earl Grey and wearing those nice fuzzy bunny slippers you love so much?
And the Viceroy hat. That's what.
Oh yes, can't forget the hat.
Yeah. So what was catching my eye today? Obviously LULU. That's a big name at OX. I think it's a big name everywhere. The kind of stealth sell-off in crude. Crude has lost about $9 in the last 5 or 6 trading days. Really got tagged today down a couple bucks. We always look at the 10-year, and I'm surprised the 10-year has come off the 3 level, especially with all the talk of tapering, getting smaller, going from 85 to 75, and then probably going to the 65 and 55 area over the next few months. And a local name, ironically, as you mentioned, Mark, I'm coming in from Casa Jacobson in Deerfield. I'm about 4 blocks from the world headquarters of Beam, and they were bought by Suntory today. And because they're a Chicago-based company, anyone who's Chicago-based, we always have a big presence in it. And ironically, that deal has been talked about for a year. I mean, that deal has just been talked about, rumored, coming, inevitable at any time, and today they announced the deal. Also, after the close today, and again, as you pointed out, we're taping on Monday, but Charter bid for Time Warner after the close today, so that will be an interesting coming in to see that trade tomorrow morning. And other than that, it was a bit bloody today. A bit of a sell-off, and we're seeing a little more of a sell-off in the after hours. But that's what we've been watching.
Obviously, days like this are going to be more active from a clientele perspective in general anyway. But given the fact that so many of OX's customers tend to fall in the dark side of the portion of the option space, do days like today generate even that much more in the flurry of customer calls and response when they're seeing, the broad indices down nearly 1.5%?
Yeah, and for a couple reasons. Number one, because there are always, every time the market goes down, you always get a sort of a cadre of people who say, here it comes, this is the beginning of the end, and I've been waiting for this. So you get some of that money coming in. You also get a lot of rolling amongst the premium harvesters who, even though today's move wasn't as dramatic, I mean, it's almost a couple 100 points. It's not a full sigma in the S&P, but you get people who will adjust. And Mike talked about how he rolled down some puts today, and you get a lot of that. You get a lot of adjusting. You also, with the premium harvesters on a day like today, you get a lot of strange, I don't understand what happened calls, because the market went down and their call spread didn't go down, and that's because vol went up today. So a little bit of explaining goes on today, how important volatility can be. And so that's really what the tone was about today. It's still relatively thin in terms of a lot of our customers. It doesn't have the feel yet that everybody's back for the year. So things are still a little bit thin. Trading volumes aren't thin, but the level of activity, in terms of what the desk says, in terms of what they're handling, is still a bit thin than what you'd expect this far into the new year already.
Everyone's still on their eggnog and New Year's comas, and they're slowly coming around a little bit every now and then to start putting some more options on in the new year. So maybe that'll continue. We'll see some more volume creeping up as the days get further along here. All right, thank you for that, Mr. Viceroy. Now it's time to keep on rolling right on into the strategy block.
The strategy block.
All right, listeners, you know what that fancy music means. It means it's time once again for Uncle Mike to come on down from on high stone tablet and smoking jacket in hand to dispense some options, wit, and or wisdom. And on a day like today, you might expect him to talk about delicious jams and jellies, which is, of course, why we bring him onto the show. But no, on a day like today, I believe Uncle Mike will regale us with some interesting talk about what really goes on a day like today, which is adjusting all those positions and all the fun rigmarole that goes into such a thing. So, Uncle Mike, take it away, sir.
I don't know. I kind of like talking about Smuckers a little bit for the jams and jellies. You're kind of getting me tempted here.
I think we need the jams and jellies block. I like it.
I do too. Today, folks, I want to go through I like telling you about real trades with real money, with real people, and real execution. And I want to kind of go through today just as one example in terms of how it can apply to you and your own trading. One thing that I've found through the years, I want to talk about, I'm going to make these, even though what I'm going to be talking about today is part of a spread with, in some cases, 3 and 4 legs, I want to just focus on one of the options for sake of simplicity, because there's other things with which I'm looking at, but if we can focus on just one aspect of the one piece of the bigger puzzle, I think that'll make this bit of wit and wisdom somewhat simple, a lot simpler and easier to understand. And even for the advanced traders, it'll be a good review, I believe. So today, I was short the 183 put in SPY. Once again, this is part of a much bigger picture in terms of the spread. And so I ended up rolling it down. It's the front week, the ones that expire this week, the January 183s. So I rolled down to the 181s, a debit of about $1 approximately. And so with all the other adjustments that have existed on this trade, this is becoming a pretty nice trade. Now, obviously, that was a losing adjustment, but the winners did better than the losers, so to speak. And the point that I want to make with this is that sometimes you have to pay a debit to roll down. Now, oftentimes, I just remember through my years of talking to the retail public and my job at Options Express, as well as through RCM, a lot of times when an option goes in the money, it's time to buy to close that option and sell to open another one at a lower price, but a further month out, just so long as you can do it for even money or possibly even a little credit. Well, I kind of want to go through that a little bit. On the put side, that can work, but you got to be real careful with that, because sometimes if you're not careful, you're going to end up rolling all the way out to 2026 if you're not careful. So with that being said, a couple points that I want to make on this. Having been there, done that in this business for over 10 years, trying to do the up and out roll on the call side, let's say that you just have a covered call and you want to buy to close the short call when it's going against you, and then roll out to another one for even money or possibly even a credit, but you're fine going out a little bit further. I haven't had a lot of success doing that, folks, and it's something that I typically try to avoid. There's other things with which I'll do to manage the risk of a short call position, whether it's naked. Well, actually, I've seldom, if ever, am naked a short call, but if it is ever naked, meaning it's part of a covered call or it's part of a spread, there's other ways with which to do that. And I think that the way with which to consider doing something along those lines on the call side is to play something with a calendar spread. Now, on the put side, let's just say that you're selling a put and you want to do the down and out roll. It works a little bit better because of the fact that as the market goes down, implied volatility typically increases. Now, once again, if you don't get this inverse correlation that I'm speaking of, everything that I say is a farce. So, and Kyle, please don't say, now knowing Mark Longo, he's probably going to cut that out and things are going to be up on his website tomorrow saying everything I say is a farce. Everything I say is a farce. Everything I say is a farce. So with that being said.
That's what we do here, sir.
Yes, so I'm just kind of preparing the audience for that. But with that being said, it's one thing that it works a little bit better if you're rolling out on the downside. Now, here's the disadvantage to what's happening with this is that on the downside, market typically moves down a lot faster. The old saying, the markets take the escalator up and they take the fire pole down. And so with that on the way down, you got to be pretty careful if you continue to roll down like that, and that you got to be able to keep up with it. We always joke about my BBI on this show, but folks, it's tough for me to do, and I stare at the screen all day. So with that being said, a couple of things with which I would encourage you to do. First thing is that if you're looking to just roll a call to the upside as a way of managing risk on a short call, I'd suggest looking at other ways of doing so. Whether it's not have that position on in the first place, creating some type of spread to where you're hedged in case it goes against you, because of the fact that when the calls go up, volatility oftentimes goes down. On the put side, it can work, but what's your plan in case the bottom does fall out? If the bottom does fall out, you got to be ready for it, and we have, once again, other areas of our spread that are in place for such a thing. That is all for today, folks.
Thank you for those tips. And I agree, Concord grape jelly is the most delicious of the jellies and really doesn't get the love it deserves. So thank you for that, Uncle Mike.
I got to go with the Smuckers.
All right. And now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, and those car horns mean that it is time for our final segment, Around the Block. This is, of course, where we break down what we're watching for the for the rest of this week. And, there isn't a whole heck of a lot on the calendar, except for an earnings perspective. We're finally starting to get some earnings on the horizon. And who knows, given that everything else is pretty placid, pretty tranquil, even on a day like today when we sell off pretty aggressively, vol didn't really explode to the upside the way you may have anticipated. So maybe some of these earnings will proceed to light a fire under the market. In one way or the other, we shall see. We got CITI coming up on the 16th, which is, of course, later this week. We've got Bank of America, a name that a lot of options traders, a lot of listeners of this show love to play around in. They are coming up on Wednesday, the 15th, before the open, so you got to get your trades in tomorrow if you want to trade BAC. Of course, Goldman Sachs on the 16th, and Intel, my old stomping grounds, on the 16th as well. I always like to keep an eye on Intel. It brings back some fond and also painful memories for me in equal measure. Andrew, what are you watching for the rest of this week, sir?
I'm watching to see if the earnings can really make us move in one direction or another. I thought either the earnings don't quite live up and we kind of sell off a little bit, or the earnings are actually good and that gives us at least a reason to, maybe go a little higher. I don't expect us going really too much higher, but, enough for a couple of names to catch a bid and run. And, but, today was, it's just one of those sell-offs. I think I like Alex's comment about, as the deficit reduces, things, what does that mean? There's less government growth, less government buying. Can't quite figure out why the market hated that number. But the only thing I could say is that's interest rates going up faster, but the government isn't borrowing money, or they're not borrowing as much. So a whole convoluted bunch of signals. But I'll go with a signal that volatility really jumped as much as it probably should have. So we'll see how long our sell-off lasts.
Uncle Mike, what is catching your eye for the rest of this week, sir?
Well, just in general, we're coming off of last week's announcements on Friday. Today was just with a later day sell-off. I'm really going to have my eyes glued to the set tomorrow. By set, I guess I should say screen, to see how the market reacts after the sell-off. There was a trade on the Russell that I tried to get into today that I set it at a limit with which I didn't think I'd get filled, but it was one where if I would have gotten filled, it would have been a very happy trade for me, so to speak, but I missed out. Even the midpoint got to about 10 cents, so that was one where I wasn't willing to budge that 10 cents. And I'm curious to see just how we react to this. We didn't close exactly on our lows. It did come off a little bit. There was a tiny bit of buying at the end of the day, so I just want to see how this reacts tomorrow. If this thing continues, this is going to be this could be scary, but if not, this could be the buy of the century. Who knows?
I love it. I love it. Always putting things in very qualified and very, very, very talked down terms, sir. I love it. All right. Last up, Mr. Viceroy, what are you watching for the rest of this week, sir?
You kind of hit on all of it, Mark. The banks, the brokerage houses, Intel, General Electric. Today's sell-off may have been a little performance anxiety in expectation of those earnings. Otherwise, I didn't really see any news. But if one of these banks really comes in and disappoints, that's the singing clock in the background. Apologize for that. But if one of these banks comes in and surprises or disappoints, then we'll see how fragile this market really is. Because today it appeared fragile. Today it was almost the lack of good news that took it down. But yeah, we're going to see all the financials: J.P. Morgan, Wells Fargo, Bank of America, Morgan Stanley. We report in the next few business days. Most of the e-commerce discount brokerage community reports in the next week or two. It'll be interesting to see what those numbers are like. And somebody disappoints, we'll see, as I said, how fragile this market is.
Yeah, I neglected to mention you guys coming up as well. So a lot of fun plays in the brokerage and banking sector coming up this week. But unfortunately, that's all the time we have for this episode of the Option Block. And before we go, as always, let me check in with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. Lobster. What is cooking in the land of the pit?
The Lobster has Bear Market Trading Strategies webinar on the 25th of January on a Saturday. Please surf on over to optionpit.com//events and check out our goodies. Now, I think the trade idea would have actually worked okay today. Obviously, the market's down, but it's kind of a hedge. There are sort of hedge ways to play, or hedge ways to essentially insulate yourself a little bit from market decline. So it will be a very nice webinar to learn how to do some stuff and put a little control back in your investing.
Check it out, optionpit.com, to learn more. And Mr. Viceroy, what is cooking in the land of Options Express education?
Full webinar schedule now that we're back into the new year. I do Hub every Tuesday. So I don't know if we'll post the podcast in time tomorrow, but Hub after the close this Tuesday, Hub after the close next Tuesday. The 21st, Nina's going to do long calls for those people who want the Option Foundation board. I know that's one of the questions we get a lot about where to get foundational knowledge, and Nina does a continuing series of core knowledge. The 22nd, Dan Gramsa from the CME is going to talk about trend trading in the futures market, and all the events are free. The whole education platform is free. It's ahead of the login. So anybody who wants to learn more, just come to optionsexpress.com.
Great. Thank you, Mr. Viceroy. And last but certainly not least, Mr. Tosaw, Mr. Uncle Mike, what is cooking in the land of the RCM webinar train?
Wednesday night, we actually have a webinar on the weeklies, the weaknesses and strengths of the weeklies. Works a lot better when you see the small letters on the marketing thing. But nonetheless, stop by on Wednesday night at 8:30 p.m. Chicago time, 9:30 p.m. Eastern time. I'm going to go through in pretty good detail my take on the weeklies in terms of how they have reacted and how they've worked over the course of the past year. And I'm not talking about just the front week. I'm talking about in relation to 1 week, 2 week, 3 week, 4 week, and 5 week options. So this is a webinar I'm really excited about, folks, and you do not want to miss. For more information on it, just email me so you don't get lost on any websites, mtosaw@rcmam.com.
Sounds good. Check that out for more information on the old RCM webinar train. And, of course, stay tuned to the Options Insider Radio Network for that upcoming Trading Tech Talk show that I mentioned at the top of the show. And if you'd like to make your voice heard on this or any other fine program on the old Options Insider Radio Network, a lot of great ways to do it. Surf on over to theoptionsinsider.com. Post a comment on the show notes of your show of choice, and we'll route it to the appropriate program. Of course, you can shoot us an email, questions at theoptionsinsider.com, or you can find us on Twitter, twitter.com/options, or on Facebook, facebook.com/theoptionsinsider. A lot of great ways to make your voices heard on this and every other program on the old Options Insider Radio Network. And on behalf of Uncle Mike and Andrew and Alex, and of course myself, I want to thank all of you guys in the listening audience for downloading and streaming and subscribing to this program and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.